Cap indices were around 7%. This week has been very, very small. I mean, ranged, and I guess waiting for Mr. Trump.
Well, that's right. And in cricketing parlance, you'd say that it was a 5-day test. It started off with the batting team getting absolutely badgered, but came back. Towards day 5, you said at least we survived, all of the 5 days, because going by Monday, Tuesday's action, you were getting very, very worried that it's going to be a rather tough week and maybe tough times ahead. But at least for this week, we, played out the innings, so to call it.
Actually, the Nifty is not giving the right picture. There was a lot of pullback in the broader market stocks. A lot of mid-cap names, small-cap names actually did very well. And then I was just looking at, because we put out so many brokerage notes, guess what? This week, in last 5 days, I've at least come across 15 to 17 IC reports on mid-cap names. So, looks like after the correction that we saw, a bit of interest is back, the sell-side interest is back, and even there is a bit of interest back from the larger institutions as well to look at this kind of mid and small cap names, which have actually corrected very sharply.
That is interesting, Nimesh. But are these all completely fresh names to sell side?
ICs,
Or
initiating reports.
But these are stocks on which somebody is initiating, others have already have coverage?
There are few which have not been widely covered, but yeah, there are few which are known names as well, like Hyundai. A lot of FI brokerages are covering. In fact, today was a lock-in getting end for Hyundai. So I guess some bit of supply would get absorbed in the days to come. But a lot of mid-cap names I saw wherein there was a lot of interest from especially smaller brokers to go out and initiate coverage on
and some
names.
Serious damage also, right? Kalyan, for example,
exactly.
I was just looking at the price 10 days now from the highs of 800 to 500 today.
Yeah.
So that's 37, 40% gone. So very, very sharp.
What about Rahul? How are you feeling about the markets? And thanks a lot for joining in, Rahul, first of all. And how are you feeling about the markets? I mean, if you were to give us a level in terms of the Nifty and the outlook for the remainder of the year, what do you be tilting towards? The large cap names instead of the mid caps?
I've been waiting for you to sort of come to me because when you mentioned cricket, it was almost like "Dukhti rath pe haath rakh diya." That was one analogy you shouldn't have given because it brings back horrid memories of the last
few months.
The
boys will bounce back. Boys will bounce back.
Yeah,
the girls are doing well.
Sorry, the girls are doing well.
Phenomenally well, yeah.
The 435 was good. But I think it's very difficult to take a directional call right now. I think you mentioned Trump a little earlier. You've just about started an earnings season. You have a union budget in a few days, and then followed 1 week post that with the first credit policy under the new RBI governor. So I think to take a directional call at this time could be a bit suicidal, to be very honest, because we don't know how all these are going to pan out. I don't know whether the impact of Trump is going to be so immediate and sudden as people are making it out to be. I mean, of course, he is very pro-tariffs, and we saw that in his first term. But I think that will probably play itself out with time. But I think the bigger, cue for us, if the last quarter's results were anything to go by, would be earnings. I think will still eventually dominate this market because, I was just talking to our economist. She doesn't expect too much to happen in this budget. I think, you still look at about 4.5% fiscal deficit for next year. I think at best you'll get one rate cut this fiscal year. So I think there is nothing that's going to move the market in a material way. And given the way the economy is shaped up, I don't think the government has too much room to tinker on the income tax front as people are expecting. So I think it's going to be an earnings-centric quarter. And of course, I think as the quarter wears on, you'll probably see more, from Trump. But I think for the next 15, 20 days, taking a directional call will be very tough. I think it's going to be a very challenging year. I think it's going to be a very volatile year. You're probably going to be at 22,000 on the lower end and 26, 27 on the upper end. It's probably going to be the range, but it's going to be very violent, I think, in that range. So it's about a 4,000-5,000 broad, point range on the Nifty. But as Nimesh was talking, I think there's going to be enough opportunities that come out. I think you just have to wait and see what time you believe your stocks are right. Because, as somebody, as a late investor once told me, there'll always be stocks expensive at the lowest point of the market, and there'll be stocks cheap at the highest point of the market. You just have to know where to look for those ideas.
You guys were talking about cricket and boys are doing poorly and girls are doing well. I thought you were talking about my kids. I got a boy and a girl. Boys will bounce back. Girls are doing well. But I think that's a story we all know, right? Girls always do well. So.
That's how Azhar used to talk. Post-match press when the boys.
I can do that for you post the show. Yeah.
But talking about
Rahul spoke about earnings, right? That's going to be a big theme. Was Q2 a blip, or do you think there is a structural slowdown? What is your take on Q3 and Q4?
So I think, Nimesh bhai, the one thing that is clearly a demarcated difference between Q2 and Q3 is I think a lot of the reactions that you have seen in Q3 our basis guidance and commentary. I think Q2 was on actuals. I think if you went on actuals, you would see very different reactions to stock prices even in this quarter's earnings. But I think consumption is in a massive slowdown. I think there is no question about that as far as staples are concerned. If you looked at the commentary that came out from LTI Mindtree, HCL Tech, I mean, if you exclude TCS, for example, the commentary hasn't been all that great. I think even for Infi, the ask rate is a negative number for the fourth quarter, if anything, you know, at that point. I think if there was any extra move to come on Reliance, it would have come and gone today. So I think when you look at the Nifty per se, I think 75% is BFSI, IT, consumer and Reliance, right? I think Axis Bank was not the best start for the banking sector. And I think even in our own coverage universe, if you look at public-private together, I think we're expecting about a 6 to 9% kind of growth on the NIs and the sort of profit before provisioning, the PPOP number that you talk about. NIMs are under pressure. So if 75% of the market, I mean, if you exclude Reliance, because like I said, if it had to do anything more, it would have done it today, and it's predominantly been driven by retail. But I think consumer, IT and banks have question marks. And in that backdrop, to take a very aggressive call on results. I think, Nimesh, the one thing that I'm clear about after seeing Q2 and just the start of Q3's earnings, we're still in an earnings downgrade cycle. So let's not move away from that. I think at the end of this result season as well, you'll probably see more stocks getting downgraded than upgraded. So in that call, to take a very sort of, you know, structurally bullish call on the market seems a bit difficult.
In fact, let's talk about IT and then come in a little more detail. So what we've seen so far since the beginning of the earnings season, that's including TCS's numbers, and TCS reacted positively, and then you had violent downward moves in HCL Tech and Infosys. The Nifty IT index has slipped nearly 2.5% since the earnings began. Now, Q3 numbers were largely in line with expectations. There was a little bit of a pickup in growth. So if you pull up the year-on-year growth rates for the mid-cap, for the large-cap IT companies, we're looking at a mid-single-digit kind of a revenue growth. Infi at 6, TCS at 4.5, HCL Tech at 4.1%. But this is better than Q3 of last year. So there is a recovery taking place. But the question that even Rahul was talking about is that these are companies which are seeing a mid to high single-digit revenue growth. You know, pull up the FY26 and FY27 forecast for Infi, HCL Tech and TCS, the numbers which are out. And on an average, analysts are expecting about an 8 to 9% revenue growth for these companies in FY26 and FY27. So therefore, if the expectation is for a high single-digit kind of revenue growth, what is the valuation you should ascribe to them? Because right now, even after the little bit of a correction, valuations are still higher than the 5-year average valuation multiple. So TCS is, you know, now closer to 28 times. The last 5-year average would be 27 times. Infi is at 25, 26 times. The last 5-year average would be 24 times. So should you be paying higher multiples for a sector which is, you know, seeing a high single-digit kind of a revenue growth? That said, as we pointed out, there is a recovery. There is a slow and steady recovery taking place. Companies like TCS, LTI Mindtree are calling out FY26 to be a better year. HCL Tech acknowledged discretionary spending is better than what it was 3 months ago. And BFSI vertical is bouncing back. You know, in the case of LTI Mindtree or even TCS, if you pull up the numbers across the board, for the last 4 or 5 quarters, you are seeing a steady pickup in BFSI, and that is a powerful tap. But for now, at least, Rahul, on IT, there are no EPS upgrades, nor are there downgrades on an average so far. What's the investor positioning? Because they did well over the last 2 years.
So I think, Rima, for both IT as well as consumer, I don't see sustained visibility of double-digit top-line growth. Now, the only question is what valuations do you want to play? Because consumer companies grow at 1.5 to 2 times the valuations of IT companies. So IT, large-cap IT will broadly be between 25 to about 28, 29. Consumer will probably be anywhere between 40 to 50, 55, right? So I think the question is, and it comes back to the point of, you know, are you paying for growth or are you just paying for something because it's relatively cheap, right? And if you're paying for growth, then these are not going to be very exciting. So you either give a very large margin expansion, right? And for that, I think the rupee will have to play a very big role because I think a couple of the IT companies, as you pointed out, have actually spoken about client ramp downs happening in some cases, some one-off, some pass-throughs that have happened from FY24 into FY25. So the barring TCS, which has about a $10.2 billion, you know, TCB, which is about 1.4 times to bill. that kind of confidence is not coming elsewhere. And a little bit of the movement that you have seen could also be positioning, where people have actually moved into TCS after these results from some of these stocks. So it could actually be a technical move within the sector that you have seen. But I think the cream here, and it goes back to the point that Nimesh was making a little earlier on large cap versus mid caps. I still think the Coforges and the persistence of the world will still continue to give you those growths of 20-25%, and that's probably where money will continue to sort of chase. And that's why for some years now you've seen the disparity in valuations between large cap IT and mid cap, but that comes back to the point, and if I reference it to consumer, it's consumer discretionary versus consumer staples. It's the exact same thing playing out, where you have companies that are growing, like going at 50, 55, 60 times. I mean, let's take a look at United Spirits pre this report that came out of the US that was linking drinking to cancer, and then the change in CEO. It was at 1,700 rupees. It wasn't a cheap stock. It was a great stock. But then again, if you compare it to staples, there is a 25-30% valuation gap. So I think it's best to probably stay with TCS basis all that we have seen. And if you were to take a call on mid caps, I think probably Persistent and Coforge, LTI, Mindtree could sort of be places to hide. But apart from that, I wouldn't venture into being a sort of, on basis what we've heard, it wouldn't be like a 200-300 basis point overweight sector for me for sure at this point.
Usually usually the IT names are like 10% trading moves, right? Through the quarter. I mean, it's been that way for the last 2 years. I mean, results day and maybe something slow through the rest of the quarter. But I mean, generally just a trading kind of thing. The other thing is with what's happening in the US next week, and BFSI being, I think all the bank earnings have come and they've all been pretty good. And I don't know, I mean, at least they could trade up on sentiment if, there are measures announced which really juice up the US economy. And, that could be one sector people latch on to, you think?
No, for sure. I think, see, Prashant, the TCV has to get converted to revenue. That's the only thing.
So on sentiment, I mean...
yeah, so I think on sentiment, we could even argue on rupee, right?
Correct.
Effectively, because I was just speaking to my economist and I was asking her, what can the rupee potentially go to next year? She said 88, 89. So, I mean, on sentiment, yes, but then it comes back to the point that you made about trading. Now, see, the other thing, Prashant, is these are all, Reema can correct me if I'm wrong, but I think these are all like around 35% kind of ROE, ROC companies. So they're not like, consumer companies that are giving you 75, 80 or even 100%. Lever was at 100% before it made the acquisition and adjusted for goodwill came down. But I think that is also the play that you have. This is such a large differential. I mean, both are very cash-rich sectors. Yeah. Both, they will go in for, from time to time, they'll go in for buybacks, or they'll, give you extra dividend and so on and so forth. But the core question is, as a shareholder, you want to go in and buy a piece of the business. Is that really growing? If you're just playing it for the ancillaries, it will continue to be just a trade. I mean, optically, lever at 22, 2300 or 2400 is a great stock to buy. It was at 3000, but do I necessarily need to buy it? Yeah. On the hope of a rain coming, or on the hope of rural, or on the hope of Manrega. So these are all, I think, there is peripheral noise, but I think if you actually get into a situation where, say, a TCS or an Infi or a lever or, some of the other consumer stable companies come and say, okay, we're growing at 12, 13%, you'd be surprised these stocks could potentially even double from here. I don't think valuations, especially in IT, are that demanding.
Actually, IT and AI, etc. I don't know if you saw Goldman CEO essentially saying that 90%, and this ties in with your investment banking also, is that 90% of a company's prospectus when they come to the IPO can be done now with AI. I mean, that's the Goldman CEO. So I mean, we're talking about very large disruption coming.
We started using it in our research reports. We send out an AI-generated report every morning of, for people who don't want to go through those volumes of paper. Right. We actually send out an AI-generated report every morning.
And IT companies are also passing on the benefit. So at least in the case of LTI Mindtree, what they said is the generative AI-related productivity benefits were passed on to their top client. And that is something that hurt them. So they've done it only for their top client right now because it's an important one. You don't want to lose it. But who knows, right? What if all those productivity benefits are passed on and the companies don't get to retain them?
And some haven't hiked wages. That's the other thing. Some haven't even taken the wage increases. So
well, Rahul, since you spoke about companies that will grow in double digits or mid-teens, I'll tell you what, we'll focus on a couple of those stocks. We'll slip into a short break. You come back, we'll focus on the jewelry theme. And Prashant as well will be telling us some more with regard to what are the expectations from President Trump, who takes office next week itself. Stay tuned.
Welcome back. You're watching Editors Roundtable, and it's now time to put the spotlight on the jewelry stocks. This is the week, at least for the last few weeks, Kalyan Jewellers has seen a very sharp drop. So in this backdrop, one wonders whether Titan is the only game in town.
Well, you know, before we get to the jewelry space, I think for many times we have seen in the markets, you're searching for the next big HDFC bank. You know, at times IndusInd Bank's valuation went towards that, and then again it moved away. In the past, we've seen Kitex Garments. You know, that one ran up, valuations got very, very hefty, and then it cooled off again. And the other one, the recent example is Titan as well as Kalyan, which gives you that question whether form is temporary, but class is permanent. Let me explain it in further detail. And that's where we focus on the jewelry theme itself, because it appears, at least as of now, that in the jewelry theme, maybe Titan is all that glitters, and that could be the reason why it trades at these sort of multiples. But let's pull up that piece first with regard to valuations. You know, you have Kalyan, that in fact, you know, the valuation moved up, and at one point of time on a valuation basis, well, it was more expensive even than Titan. And from there, you know, it's come back down post this recent correction. But that's the kind of run-up that we saw on the stock price, and that's why it made it rather expensive. And in the past, you've seen various companies. They promised they're going to be the next big theme, whether it was PC Jewelers, Gitanjali Gems, you had Tara Jewels. All of them, they glittered for a little bit, but they deceived ultimately. And that's why Titan, it seems, gets that sort of a multiple. So all that glitters, is it just Titan? Titan trades at around 65 times or thereabouts. And time and again, people say, well, it's not trading cheap. But does it deserve that sort of a multiple? A few factors at play. One, Titan, it appears it's acquainted with trust. Whether it's a shareholder, whether it's with regard to the customer, you normally associate Titan with the high pedigree, the good management out there. Next up, you want to be in a sector which has a tailwind. And the jewelry sector, it seems it has that sort of a tailwind because it's at around a 5 lakh crore in terms of a total market size. Organized players, well, they are at around 40%, but in the last 6 years, that organized share as a percentage of the market has moved up. So you have the industry tailwind because the industry has grown by around 8 to 9% in the last 6 years and is expected to grow at a faster clip from here on. And you have the additional tailwind of unorganized moving to organized. And Titan, it seems they have the ability to adapt to the customer. Started off as a watches company, went into jewelry, then they were targeting the youth. They are also into IVM. And of late, you know, they've made a couple of inorganic acquisitions, case in point being Carrot Lane, and also trying to focus on the ethnic part of business, the sari part of business via Taneria. Short point is the ability to adapt to what the customer wants is something that makes them stand out. And if you look at all those industries that they were in, there's a large unorganized market, which makes a case for them to further penetrate just by the pure shift of unorganized to organized. Now you're talking about growth, and everyone's wondering what about growth? Since the industry is going to grow, well, Titan will also participate in that growth. And currently it has around 8% of the market, and they've indicated they want to go to double digits. And in 2022, they said they want to double the base, the jewelry revenue base, by 2027. Last few years, they've done very, very well. So now they need to do maybe mid-teens to get to that number. In an economy which is growing by mid-single digits, you know, 5 to around 7%, depending on what kind of estimates you're working with, this one's going to grow at around 15 to 20%. So the question is Titan the only stock that people want to play from the jewelry space? Going by past records, it appears all that glitters is Titan. Rahul, I wanted your view on this one. You know, Titan, the stock has corrected, I think, close to around 15% from the recent peak. And time and again, everyone's been searching for the next Titan, whether it's the few IPOs that we saw, whether it's with regard to Tara, PC Jewelers, Kalyan Jewellers. What's your view on it? You wanted something that will grow in, you know, that mid-teens. Here's a sector that will grow hopefully in mid-teens. Your view on it?
It's been relatively insulated, you would have to say. I think while the rest of the consumer pack has struggled, we were discussing discretionary earlier. But our view has been pretty clear, Nigel, from day one. I think if you want to play this space, it's only Titan. And I think even if you look at, you know, I just want to tie this into a stat with the banking sector credit growth. If you see the maximum credit growth that's there in the banking sector, it's actually loan against gold. That's actually been growing at 40-50%. And this is not a one month or a 1 quarter phenomenon. It's been there for a while. So I think when you have that kind of an appetite in the market, you know, agri industry, services, consumer, retail, housing, everything has come off. You know, it's all like in that range of between 9 to 14-15%. But you have in some months where, if you look at the sectoral deployment of credit, loan against gold is going up by almost 40-50%. And as you rightly pointed out, you know, it's you know, a very famous phrase from a movie. Sometimes it's easier to get to the top than actually stay at the top. And I think over a period of time, what happens, I think initially, Nigel, is when you in a sector where you have only one player, when a few others emerge, people are ready to give it the benefit of doubt to just, diversify. We saw that, when Jubilant and Westlife were the only listed players, and you had Devyani's and Sapphires and the others coming along, and so on and so forth in the EMS space. But I think eventually what's been tested, and, I think the one important thing that you mentioned was the trust factor. And, close to where I stay, and I was just telling Nimesh this, I was like, if you go on a weekend to the Churchgate Tanish shop, and it really has nothing to do with festive, right? Now, but you do technically say we're in the middle of wedding season. Weddings are pretty much happening all year round. It has a couple of competitor shops around, some of the names that you brought up, and it'll just tell you where people are flocking. I mean, just if you go on the street and see. So I think right now demand is insular. I think Titan was asked on its con call a couple of quarters back, दुनिया इधर की उधर हो गई है, आपके डिमांड पे इम्पैक्ट क्यों नहीं आ रहा है? इज लाइक जो 1.5-2 लाख की ज्वेलरी खरीद रहा है उसको इतनी इम्पैक्ट नहीं मिल रही, नहीं दिख रहा अभी तक. So that goes, feeds into that entire consumer discretionary. And why venture out when you have a proven track record? At some point it'll peter off when consumer discretionary as a space peters off.
Yeah.
But I think, the fascination with gold in India is still a very real thing, and I gave you banking data to support it. So if you have to be invested in one stock in this sector, it should be Titan. On a lighter note, I hope that watch that you showed is being given. If you've had a good year, that comes to you as a bonus. But that's a very, very smart watch you showed on your graphic there.
Well, we live in hope. But
also, thankfully, no lab-grown gold yet. No diamonds, but no gold.
Okay, but let's get to the big event, right? That's on Monday. Donald Trump is all set to be sworn in as the 47th president of the United States. What does this mean, right? We've been talking about tariffs now for the last few months.
As Elon Musk tweeted, success, we don't know, entertainment is guaranteed, right? Let me actually go across to the wall and just put out some points here, which will give you a sense of what are we looking at. So I'll start with what has he said during campaigning, during the period of campaigning. I mean, just the basics. He said, well, he'll impose tariffs on all imports ranging between 10 and 20%. He said on China, import tariffs could be between 10 to 60%, and he also then sort of lately said 25% tariffs on Canada and Mexico on day one. This is what he said. So there are two things, the scale of the tariffs and how the tariffs will be actually implemented. I've just sort of divided this into four parts. One is we see a repeat of 2017. And what was 2017? US negotiated but did not act aggressively. Actually, the effective tariff rate in 2017-18 period only went up 18%. This is during Trump 1.0. What happened during this period? The renminbi depreciated 14% versus the US dollar. The dollar index was up 11% in this particular period. I think a repeat of 2017 is unlikely because, he's obviously promised much more. He has the experience of his previous term. And his base wants it. I mean, he's swept the polls, and I think 2017, expecting a 2017 perhaps is a low probability chance. We'll see something bigger. The number two is sort of probability is gradual implementation of tariffs. Here, naturally, I mean, if you sort of, go back and forth, it gives you more leverage in negotiations versus sort of putting the full size of the tariffs on day one, optionality to increase or decrease the rate of hikes as one goes on. But how will markets react? There is a clue, because on the 13th of January, there were headlines that in news reports which were later denied. But these are like, balloons, trial balloons floated, maybe, I don't know. But how did markets react to that headline? The headline was that Trump's team was studying monthly small tariff hikes of between 2 and 5%. The dollar sold off very, very sharply, very, very quickly. So if this happens, which is a gradual monthly increase or whatever, probably we see the dollar coming off sharply. Number three is targeted industry tariffs. So, tariffs on Canadian autos, lumber, Chinese machinery, electronics, etc., etc. This perhaps is the most complicated of the lot because, markets will have to go to every isolated tariff on this product or that industry, and it's going to be harder to kind of decipher. Also, lots of speculation around who could be next, retaliation, etc., etc. Again here, if this is the case, it will be considered mild because, again, on the 6th of January, there was a news report which suggested exactly this, which is it's not going to be on all imports into the US, it's going to be targeted. What happened? The dollar sold off very, very quickly. So, we know we have markets react, at least the macro markets reacting to these headlines, and so we know what will cause the dollar to go up and what will cause the dollar to go down. And of course, we come to the last one, which will be the most severe, which is, all the big guns out on day one, big tariffs on day one. And I think this would see significant adverse market impact across asset classes. And of course, I think the dollar could skyrocket on tariffs, inflation concerns, etc. So these are the 4 things. We know it will happen. It won't be mild, but will it be severe on day one, all out on day one? I think that's the thing we are sort of yet not clear about, and we'll know Monday evening. Back to you guys.
Well, nice caption, Prashant. Trump, the tariff king. Interesting data there. But out of time completely on this edition of Editors Roundtable. Thank you very much for watching. Enjoy your Friday evening and the weekend. But stay with CNBC TV18 for more news and updates.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The market snaps a 3-day winning streak, ends in the red for the second week in a row. IT stocks along with financials drag the benchmark indices in trade today. Reliance Industries lifts the Nifty, which ends just above 23,200. Wipro posts healthy numbers in